Welcome. You're on the Fringe Show. I'm your host, Tatiana Zalan, and I go every Friday on the show at 2 p.m. Dubai time. The Fringe helps you to navigate the rapidly changing world and increase the odds of your success. Here, we discuss technology, startups, mental models of successful people so that you too can take advantage of the opportunities in the new digital world. It's episode 48, and I decided to sort of continue with a topic that I started in the last show, which is how do we deal in the crypto market with the volatility that we have right now. But today I'm focusing not just on the digital assets generally, but rather focusing on collecting and investing in digital art in a volatile market. So we're talking about art, which is digitalized as NFTs. And NFTs at the moment are probably the most leveraged and speculative segments of the crypto market. And it's my view that aping in NFT projects might have worked in a bull market, but in a volatile bear market, you need a different kind of strategy and a different mentality. And this is what we're going to talk about. What's the winning strategy? But also, just before we get started and to get you excited, I think that probably has never been a better time to invest in NFT art. The usual disclaimer as I go along, the views are my own. They do not represent the official views of organizations and employers that I'm associated with. It's also not an investment advice. I'm just sharing with some of the thoughts and my experience as well and how you can think about investing in NFT art. So the Fringe show here is for educational purposes only. We'll start with a little bit of general background to give us an idea what we're facing with and what kind of volatility is there in the market. Then, what are the success factors in the NFT market? If you want to become a successful artist and particularly a successful collector, what do collectors actually looking for if they're very well reputed, high net worth individuals? What are they investing in? And finally, we'll look at this winning strategy in the NFT market. It's according to me, it's my opinion, as I said, but maybe you'll find something really useful in that as well. So the general sentiment at the moment is, yes, the markets are very volatile. We're probably in a bear market, and economists typically think that a bear market is when we have a widespread price drop of 20% or more that lasts for at least 2 months. Also, what we do know is that unfortunately consumer spending power is down, and that means that the disposable income that was once going towards all these things in crypto and stocks and NFTs now has to go to some essentials like food and housing and probably transportation. And when prices fall, or when we see something like that, smart investors turn into assets that retain their value. And unfortunately, in the NFT segment, we haven't seen this retention of value, quite the opposite. Just to give you a bit of an idea, in May alone, we've seen probably a total volume drop in something like 50%, and that's in May. And yes, there is a correlation, of course, between the general cryptocurrencies market prices and NFT prices. But there are also some factors which are other factors other than the general environment that are affecting the NFT segment, and they are very much sector and project specific. If you look at the blue chip NFT collections, such as CryptoPunk and Bored Ape Yacht Club, Mutant Ape Yacht Club, Moonbirds, they have seen floor prices and market capitalization that goes down by more than 50%, unfortunately. Just to give you a bit of an idea about Bored Ape Yacht Club, which is probably one of the most popular collections, they saw their value decline sharply, firstly because buyers shifted to other collections, more hype new collections, but also because of the general slump in the market. The floor price for BAYC declined about 40% in May alone, and that fell from something like 150 ETH to 90 or so ETH, according to some analysts. Are there any good news on at the background of this doom and gloom? Yes, there is some good news, and in the end, not everything is negative in this bear market, and some data analysis from NFT Go demonstrates that there is a decrease in traders and a steady increase in holders. So people are hodling, as we say in the crypto market, rather than trading NFTs. I want to draw maybe your attention to an interesting distinction that I've come across recently that we probably intuitively we know about it, but it's been formalized in a book that I'm now reading. It's probably one of the best guides for all artists, how to create and sell NFTs. It's written specifically for artists, but also, of course, collectors can also find it rather interesting. It's by Magnus Resch and Tam Green, and they're both experts in the area of NFTs and traditional art as well. So they make this distinction between two segments in NFT art. The first one is what they call artistic or art NFTs, and they're created directly by artists or by generative art algorithms, which are coded by artists. Here, the focus is on the art itself, not on the utilities. And some of the examples here that most of you will be familiar with are Jen Stark and Hackathon. The value of this market is not huge. It's something like 1.6 billion with 0.8 million transactions. That translates into an average value of something like 2,000 per piece. So that's the first segment. The second segment is what we call collectibles, as you probably know, and that comes often in collections of something like 10,000. Then can take any form of any type of digital object. It can be animals and people, avatars, planets, and so on. And they very often come with utilities. Typically, they give access to an exclusive community or some other privileges. And good examples of that are Bored Apes Club and CryptoPunks. The value here is significantly high of this segment overall. It's something like 9.5 billion. That's for 2021. Last year, 4.6 million transactions. And interestingly enough, average value of that is also something like $2,000, just over $2,000. It's useful sometimes to compare the NFT market to the traditional art market, which I'm currently doing. And the NFT market actually lags the traditional art market, both in terms of volume and in terms of the number of buyers, which are significantly high in the traditional art market. If we look just at the buyers, for example, it's 10 million in the traditional art market versus something like 600,000 in arts and collectible buyers. And while the average prices of both traditional and NFT markets are quite similar, in the secondary market, it's actually a very interesting picture that we're having today. Again, it's from this book. What they're saying is that for artistic NFTs or art NFTs, the secondary market is a lot higher than in the other two segments, and it's something like the $5,500. So this is higher than in the collectible market and traditional art. What also is interesting is this a bit of stats on the average holding period, the purchase and resale. The average duration between purchase and resale in an art NFT market is 33 days. In traditional art market, I bet you won't know that, but it's 20 plus years. It's quite long. If you look at the buyers, and that's another very interesting statistic that gives us a little bit of insight what they're looking for and where kind of the value is. Buyers of NFTs are very different from the buyers in traditional market because their primary motivation, and that has been established empirically, it's not just anecdotal evidence. Their primary motivation is financial gain. Investment returns are the key reason why they would purchase. purchase. Most of the works, particularly in the collectibles category, I would argue, are really designed as financial products with a lot of marketing hype that goes along with it. Then there are buyers and collectors in traditional art markets. And according to Deloitte, they've recently released a study, 2021 study. They looked at sort of art investment and why is it part of private banking for high net worth individuals, people who have more than $30 million in their portfolio, and they usually dedicate something like 5% of their portfolio to art, traditional art, when having in mind here. So these high net worth individuals invest, 6% of them invest just for financial returns, financial gain, and that's it. Then there are 30% who collect for very different reasons. They're into kind of emotional attachment, into aesthetics, and they love art. This is why they collect. They're not so interested in the investment returns. But the overwhelming majority of these people, 64%, collect because of two reasons. Firstly, it's passion, but it's also profits. And such investments give the collector pleasure of owning a masterpiece and awareness of the social consequences of one's actions, as these collectors see themselves as guardians of art legacy for generations to come. And of course, they're interested in financial returns as well. It is for these investors that have very long investment horizons of 20 years plus, and this is because this is when art becomes most profitable. Now, let's have a look. It's coming from this book and also a study that was done in relation to this book and the methods that these studies are using. Let's look into the success factors in the NFT world. It's really from the artist's point of view, but I think most of it is relevant for collectors as well. Specifically, this is coming from research by Albert Laszlo Barabasi, who is kind of a data scientist with a penchant for art. That's a study of success in art. What makes digital art a digital artist successful? He analyzed a lot of data, as you would expect from a data scientist, more than 50,000 artworks from Foundation, which is one of the art galleries, digital art galleries. This is what he found. There are 6 findings, and some of them are very counterintuitive, and this is why it's useful to really pay attention to that. The first is that, few artworks sell. Only 30% of listed items were sold, and only 4%, according to him, made it to the secondary market, and even less so to tertiary markets. So what this is telling us, that the market, despite all the hype, despite what we know and anecdotally hear about it, is not very liquid. The second major conclusion that they have is, or he has, is that be a first mover, and that's important for artists and collectors alike, because artists and collectors who joined early benefited from first mover advantages. NFTs uploaded by initial adopters sold at much higher rates than works that were uploaded at later stages. Then choose your social media wisely. Does the size of Instagram or Twitter following matter? And this is very, very interesting because it's counterintuitive. What they found, that there is some correlation between your social media following or your artist's social media following and their success, but it's very weak. What is important is the number of followers on the platform, like Foundation or maybe OpenSea. Having a large follower base on social media platforms is, in other words, not enough. And for collectors, what that means is don't be taken by the size of the following of this particular and this or that artist on social media. It's not that relevant. Networking is key, and this is very similar to what we have in traditional art market as well. So what this means, if you're an artist, well, connect with successful NFT artists. An example of that is Justin Aversano, who invites through his Quantum Art, a new project of him, his invites all these unknown artists to exhibit, and their art sells almost immediately. And that's because of the clout that Justin Aversano, a very famous digital photographer, has. The fifth point is that price history matters. And this is something that both artists and collectors need to know. For every artist, there is a range of prices within which their work will move. And this range appears to be very stable over time. For top artists, it's 20,000 plus US dollars per piece. For mid-range, anything between 1 to 20,000, and low range is 1,000, around $1,000. So what he found is that it's really hard to move between these ranges. In other words, if you're stuck in one of these ranges, it's unlikely that your work will go up to $100,000. So for collectors, this means choose your artists very carefully. The final point here is build a collector base. Successful artists, all of them, only need a few powerful collectors, or whales, as they call them in the crypto market, and they buy repeatedly and they buy at high prices. So now that we understand the background, the context, that what makes an artist successful and the collector successful as well, now let's have a look at the winning strategy for the volatile market. The first question is now the right moment? And I would argue it's probably you wouldn't have a better moment. Why now? Because we are in a rather special situation in the world around us, where we see that the old paradigms are not working and institutions are being destroyed. For example, as baby boomers, and I'm a baby boomer, how many of us would have heard that in your investment portfolio, you should have 60-40, right? What we're seeing now, of course, is that both treasuries and equities are collapsing. So the 60-40 ratio is just really meaningless. So art is one of those alternative investments. Again, it's not investment advice. These are just my opinions and my thoughts that I put together for maybe your benefit. Have a look at them, listen to them. Maybe you will agree, maybe you will disagree with them. The second point that I want to make is invest for the longer term. Should it be 20 plus years if you're investing in digital art? Probably not, but at the very least you could invest according to the cycles. In the past, or you can ride the cycle. In the past, these cycles used to be in the crypto market 3 to 4 years, so maybe you should wait for another 3 or 4 years from now. Think like the high net worth individual, be both a collector and investor. So if you maybe you will try to marry your passion and financial returns. Be less of a financial trader. This is a very different mentality from buy and sell in 33 days. An interesting question is, well, what type of NFT art will be in demand? And that's my view. So if you want to collect and invest in a volatile market, what will sell? What will hold up its value? And this is what not just me is saying, but other people, other analysts, other art experts. This is what their kind of collective view is. Firstly, NFTs as digitized versions of physical pieces will sell well and hold up their value. One such example is Banks's Love is in the Air, which sold at an auction for 12 million, and it's digitized and it was fractionalized later on. So NFTs digitalized version of physical pieces. The second second type of art is NFTs that have been created by artists with an established reputation in the physical world who have extended their art into the digital world. And a great example of that is Trevor Jones, again, a name that will be familiar to most of you if you're into this artistic art and NFT space. Trevor Jones primarily makes paintings and animates them afterwards. He's a classically trained artist, and his very first NFT sold on Super Rare for over $10,000, which was a big surprise even to him. Then you probably need to ask yourself a question: do I invest in established artists or young or emerging artists? It's not unusual in the non-digital world and the physical world of art for emerging artists, for their art to have to go up 2 to 3 times a year. And I personally believe that spotting a rising star is far more exciting than maybe go for established artists, because they tend to be quite expensive. So you probably won't find this huge increase in value over time. You also need to be paying attention to forward-looking art, novel technologies, visions, or concepts. A wise collector will pretty much make a distinction between primary art and secondary art. Primary art is the novel art, and it's very, very valuable. This is what will go up in value. Secondary art is derivative. It repeats what has been done before. It repeats itself as well. And this art is not going to go up in value. So pay attention to this forward-looking art. Digital art reflecting important social trends will also hold up in value. And this can be anything. It has to be sort of recent and something which is rather topical. It can be anything from consumerism to interest in space travel, for example. And probably also, if you're a collector, you need to pay attention to those digital artists who have credible communities on the platform that they're selling on. As we said, don't look for their social media following. And just to wind it up, I think that as with any investment, aping in projects that may work in a bull market, but it's not a very good strategy in a bear market. You need to do your due diligence. You need to research the artists and projects really, really well if you want to be successful. And in conclusion, I would like to quote Trevor Jones. This is what he said not a long time ago, well, before the bear market, but I think it still holds. I'm confident rare digital art will establish itself as an important part of the story of art. Although the contemporary art establishment is a powerful institution and one of the important gatekeepers of art history, I believe NFT art will reach mass adoption in not too distant future. And I hope so too. So I hope that these little tips will help you to invest in art that will really hold its value, that will increase in value, and that will protect your wealth as well. I'm also confident that Web3 is here to stay, and digital art and generally art as an investment are here to stay for a very long time with us. Well, I just want to have a look at the comments that I'm seeing here. Larissa, yes, hello. Thank you so much for your support. I'm really pleased that you could join me on this show. I know that you are interested in art, and probably I'll get a sparkle interest in digital art as well, NFT art. Well, thank you for joining, and I will see you next Friday at 2 p.m. Dubai time. All the best to you all.